Hey, what's up, everybody? Um, yeah, I just want to use today as like a tape reading session, and what I mean by that is, I don't plan on taking a trade today, but usually using Fridays, just because I don't take a trade on a day doesn't mean I'm not watching the charts, watching price. So I try to watch price at least move every day. You guys know that I try to trade Mondays and Fridays because they tend to be the counter trend trade days, and so that's not always the case, but more often than not, it tends to be the case. Um, just kind of give you guys an idea of what's going on. So, like I said before, Mondays I stay away from the charts because it's usually going to be the pullback to start the week off, right? So, if you look at any candlestick, any weekly candlestick, right, or daily candlestick, if you're bearish in the day, the power of three says we're gonna, accumulate, manipulate, and then distribute, meaning that we're going to uh I always draw this out so people can understand the concept. But anytime you look at a candlestick, you should see a couple of things that we talked about, like imbalances, balances, that type of stuff. But you should also see power of three, right? It's accumulation, manipulation, distribution. And so, um, if you're bearish, and obviously the opposite if you're bullish, right? We've just been in a bearish market, so it's on my head as far as being bearish. But accumulation, manipulation, excuse me, and distribution. For you know the charts as well. So really, so the big thing is you want to make sure that when you're looking at the markets, you can see that at any given time. But also, if you think about a candlestick, right? Let's say this is a candlestick. This is your opening price. This is your high of the day, high of the week, high of the hour, right? And then this is your low of the week, low of the low of the hour, low of the minute, whatever. Same thing here, opening price, you know, same distribution or accumulation is going to be your or manipulation is going to be your low that's formed on a candlestick, and then distribution is going to be your high, or higher price than the open, I guess. Um, so usually your days, your manipulation days are going to be your beginning of the week, right? Beginning of the hour, beginning of the minute, the beginning opening times of the candle. Usually your charts, your price is going to be manipulated. And so that's why we always project a pullback off to start the week before the real move actually happens, because you know what's really going on, the science behind all this is that the algorithm, the market makers, whoever you want to call it, they are, accumulating sell orders above these highs, right? They're grabbing buy side liquidity, right, to match it up with the sellers that are trying to sell in at a later price. Same thing here. They're accumulating and you're grabbing, um, you're manipulating, basically buyers to get your sellers to get tricked in, so you can take those sell contracts and distribute them to the buyers up here. Um, and so we want to flow with the overall trend. And so usually on those days, the Monday, the Tuesday days, we know there's going to be a lot of accumulation and manipulations happening during those days. And so when that stuff is distributed, it's usually, the Tuesday London session. It can be as early, right, as Monday, uh, Monday London's or Monday New York session. But more often than not, that Tuesday, Wednesday, Thursday, those are going to be the days where prices distributing throughout the week. And so, we want to be in the markets when those days are happening, because we just all ultimately we want to get the biggest chunk of the move. If you have to look at a weekly candle, right? Would you want to get the pullback that happens to here, or would you want to get the sustained run that happened all of this week going down, right? Or the majority, the bulk of this week's move price action. Same thing with here, right? If you look at this candle, let's look at this candle right here, right? So this is a weekly candle, right? So we have accumulation, manipulation. It's this price trade at one time was trading all the way down here, then distribution. So this run up. So would you rather be, get the price run that happens from here to here, or would you rather get the price run that happens from this low all the way to this high? Right. And there's nothing wrong with grabbing that way, but we're trying to get the biggest chunk of the move. We're trying to set ourselves up for the best possible scenario, right? And so That's all we're trying to do here. And so with that in mind, that's why I set out Mondays, because a lot of times these accumulation days, your wick days will a lot of times be Mondays and Fridays. And up to Tuesday, Wednesday as well. But Tuesday, Wednesday, Thursday, we're looking for our price to hit our, kind of like our reversal and kind of start that overall movement. And so when you think about it like that, for me personally, I'm just trying to set myself up to get the best chunk of the move that happens each week. And so for projecting stuff to go long, why would I be trying to chase shorts during that week when I could take longs in this case, or in, the current market conditions? Why would I look to take long entries? If we called out, we did all of our pre-market work, we think that the price is going to reject out of this fair value gap and continue to go lower. That's exactly what it's doing right now. I was kind of scared coming into this week because it was trading up here at one time. So, but I told everybody there's a couple things that I wanted to see, right? I wanted to see that consequent encroachment of this wick maintained, meaning that I didn't want to see a daily close above this 50% of this wick. And I definitely didn't want to see a weekly close above the 50% of the wick. So we were trading underneath that. And that's why yesterday I called out in the chat that I was looking for sells today. And sell opportunities, because we had gotten a couple daily closes underneath that 50% of that weekly wick. And so I figured, it was going to be a good opportunity to look for short opportunities. And we were probably going to reject out of this fair value gap, which we've been sitting in. So that's what I wanted to see. So obviously, our long-term targets, or maybe over the next couple weeks, are going to be these weekly lows, these relative equal lows right here, these relative equal lows right here, and then this fair value gap right there. So that's what I'm looking for over the next few weeks. Coming into individual setups, though, I wanted to use the session as a tape reading session, because I wanted to get a better opportunity to just, get some chart time. I haven't gotten a ton of chart time watching this week, just because the market conditions haven't been great and I've just kind of been preoccupied. There was a couple sessions. I've been paying more attention to Euro and GBP lately. That's only really because the price action up until this week has been pretty clean. And then also, just people in the chat have been asking a lot about Forex pairs. So I want to make the distinction that I'm an index trader, now more so than Forex. Like I've been calling stuff for Euro and GBP, for like the last month or so, month or two. But for me personally, it's like indexes are cleaner. The setup that I taught you guys is basically what I'm looking for. If you think about accumulation, manipulation, distribution, right? And so if we're looking for price to continue down, this is our accumulation channel right here. We want to see it play above the high of the day or below the low of the day, and then look to be a buyer down here, or a buyer down here or a seller up here once we grab that buy side or sell side liquidity, right? And so today, though, because today is Friday, and we have been trading very low to our low of the week. Let me straighten this up so you guys can see it. So really, we've been in this really messy channel where price has been going back and forth. One thing that I'm noting in the long term is this sell side liquidity, right? And so, we know that when there's trend lines, there's sell side being built up. So I can imagine over these highs, it's going to be a bunch of pending orders from big banks, big hedge funds, institutions. Then in the case that price breaks out and goes higher, then they'll be looking to hit that. So at some point in time, we're going to take out this liquidity. I just don't think it's going to be right now. I think we're going to trade a lot lower before we ever come back up here. Making note of that because of these relative equal lows right there. So then these are clear and obvious. So like I really want to see these get taken out going into next week or the next few weeks. Obviously, this big fair value gap right there. Anyway, so in the meantime, so we've been trading, if you look at the weekly candle, we have been trading really low, like very low, close to the low of the week up until today. And so this is pretty much, this price action has been today's price action. So this could be a setup for a counter trend day. I'm also not going to like force the issue on this at all. So I'm obviously not trading today, but a lot of times on Fridays, just like you had the Monday, Tuesday, Wednesday pullback, whenever you're trading at very, very near the low of the week on, Thursday going into Friday, which is what we had been, there's usually some type of retracement going into the range. And so if we're looking for an overall retracement on the bigger time frames, we would like to see, somewhere around the opening of the market, that 9:30, which is about in 3 minutes. We'd like to see price open up and take out sell side liquidity and then continue to rise up. But right now we're just kind of trading in this channel. So we're waiting for kind of like a breakout of either one of these. We want to see our buy side or sell side get hit. And then we want to be a seller in the opposite direction. So I always kind of think about it like this, where we think about liquidity, right? Is that we want to be a buyer or seller. Where's my emoji at? We want to be a buyer or seller. There it goes. Right. So at any given time, we know that there's sell side liquidity here, right? So we know that there's sell side money. That means there's a bunch of money down here, and there is a bunch of money up here. We know there's a bunch of pending orders, people that are looking at this channel and saying, okay, cool, this is the high of the day. I'm gonna put my stop loss up here. It's the low of the day. I want to put my stop loss up there, right? And so, whenever that happens, we know the liquidity is building up. We know it's going to get purged. We know the algorithm is going to run to levels of liquidity. And so we want to take the opposite. A lot of people are going to be seeing this as a breakout position. We want to be sellers up here. We want to be buyers down here, right? And so once you pair this with your overall bias in a normal day, if this is a Tuesday, Wednesday, Thursday, when we're looking to trade, we know that we want to grab the buy side up here and continue down and keep trending down with the overall bias that we're seeing on the weekly. We think we're going to get lower prices, so we want to be sellers up here. Excuse me. So that's the normal bias on a normal day. Fridays are a little bit different because we know we always get, well, not always, but a lot of times, especially if we're trading near the weekly low, this is the low of the week right here, right? So if we know if we're trading that low, like today made the low of the week. So if we're trading near that low, then most likely we're gonna have some type of retracement in the range. And so that's what we're gonna be watching for. And so really just the market just opened up right now. And so we want to get a better understanding of what's going to happen. So I really don't have a quote unquote intraday bias for today. I can see both sides happen. I can see us making a lower low, right, and continuing on down. But I also can see, since this is the low of the week, it's a Friday, I can also see us trading back into, a higher time, like back into the range, and going higher and making it a counter trend day. So I'm just really watching. I don't really have a bias today. But I would just, this is a day where you come to the terminal and you really just would make notes of stuff that's going on and see, because whatever the move is for today, you will see price action kind of you outline with the same stuff that we've been looking at for, the last couple months, right? The same liquidity markers, our relative equal highs, relative equal lows, fair value gaps, trend line liquidity, like all of those different concepts, right? Like are going to play out. And so ideally, you want to just note and see like, okay, cool. Once stuff starts happening, can I project where price is going to go? Once price gets into the movement, which that 10 o'clock to 11 o'clock hour is going to be the bulk of the morning move, right? So can I project where price is going to go once that move starts happening? Should I aim, can I aim for liquidity? So it's basically like you're playing the game without playing the game. So there, like that light. That's all we're doing today, right? We see this big consolidation, and price might just consolidate. We had a huge drop yesterday. We dropped like 300 points. There was a big Jerome Powell called. So a lot of you guys caught the move yesterday. I won't break that down because I want everybody to kind of put some stuff in the chat about their trade setups. But I think everybody caught this. This was actually a very tricky one because when Jerome Powell was speaking actually kind of cut out. And so I wanted to swing trade this yesterday. So I told everybody to cut their positions. I held mine because I wanted to swing trade, and I ended up exiting somewhere down here. When these, especially when these relative equal lows got formed, I kind of made a note of that. And so, and then also after Jerome Powell was talking, there was a fair value gap that opened up in like the 5 minute to 15 minute, and so price traded back into it there. And I wanted to see price continue to go lower. So this is when I would jump down to my just hopping back for today. This is when I would hop down to my 1 minute time frame. And really just get a better understanding of what's going on here. So you can see we grabbed, so this is our high of the day, our low of the day, and we've just kind of been trading in this range. So ideally what we want to see here is, price take out sell side or buy side above this high, below this high. We took out some internal range liquidity. And so internal range liquidity is just going to be the highs and the lows in between the high of the day and the low of the day. So we grab liquidity here. Took out this high. We're forming some imbalances here. So I'm going to note those as price kind of so I'm going to note these, right? Just in case price wants to come back into these ranges. I think that's the only one. There's a very, very small imbalance right there. So I'm just making notes of stuff as price. Yeah, it's like really small. I don't even know. It's a very small imbalance. So trading under these lows, you can see sometimes there will be opportunities to enter the run before our set time, but that's not what we're waiting for. We know that 10 o'clock to 11 o'clock hour, especially 10 o'clock, even 10 o'clock to noon, is going to have the bulk of the price run for the morning session. So we want to we want to catch that trend. And usually, like I said, it's always a second move. I wouldn't be surprised if we trade back into this imbalance right here. These relative equal highs sitting right under this imbalance. I wouldn't be surprised if we go back into that. Overall, again, I don't have a bias for today. I think this might just be a choppy day. So I could see us taking out both sides of the range, taking out this low, taking out this high, just because there was a huge move yesterday. Yesterday's movement was like 300 points. Yeah, so we traded back into that imbalance. See that there. If we were selling, it would be, I could even see us trading back into this. But we're really just trying to get a better understanding of the overall move for that's going to happen today. Right now, we're just kind of sorting out internal range liquidity. So we took the buy side off of this high when we took out that high, and we traded back down below these lows. Traded over this gap, use this gap as this very small inverted fair value gap to trade back into this range. Would not be surprised if we hit this and then just continue to fall out. So this is an example of an inverted fair value gap. It's very small, very, very small. But that low to that high, how price broke out of it. So this is a CIVI, right? It's a sell side imbalance, buy side inefficiency. And so when we traded over this, see how it's using this as support. It might not continue to go, but the idea that it traded outside of this range and then traded back into it, when a CIVI, you're supposed to trade into it and then reject. So when it fails, it'll tend to use those levels as support. And so we're trading back into this bigger fair value gap now. this would be if this was, I mean, this is technically not the high of the day, the low of the day, but like ideally, I would want to see price follow out over this, and there's not really a fair value gap on this side. So if we did start to reject here, we have to keep the notion in mind that we are looking that price goes up to fill an imbalance or take out a high, or it goes low to do the same thing. And so if price starts breaking out here, there's no imbalances here. Really, I think there's just that small one right there. There's no real imbalances here, so we could see the price could tend to just fall out and maybe take out those lows, which is what it's supposed to do. So it's kind of what we're waiting and watching for right now. So ideally, we'd want to see this reject out of there or respect it. And if it doesn't respect it, ideally we're waiting for our plays at the high of the day, at the low of the day. That's our safest zones where we want to trade into. And so that's what we would be looking for today. So we see this rejection that we're getting out of this fair value gap. We traded back into this secondary imbalance right there. This very much could be a consolidating day again, because we did have that huge price run. I'll go back up to the 15-minute time frame. This huge run that really kicked off with Jerome Powell speaking. And so everybody caught this setup right here. Jerome Powell, like you'll start to notice Jerome Powell is the Fed chair, and so when he talks, inflation rates go up or down. And so you'll notice that the news serves as an opportunity to grab liquidity. When news releases happen, they're running to levels. I don't ever trade. You can't really predict this, right? Because this candle could have kept going up still. But you'll notice that when the liquidity was taking over this high, that was our high of the day, right? We formed a new high of the day. All we did when Jerome's talked is really just grab liquidity. And so the news is really just serving the agenda of the market makers of the algorithm to grab liquidity and trigger people in. That's it. I don't always know where they're going to go to levels, and that's why I don't trade news. But like to me, I don't even pay attention to the news releases. Like I pay attention to the news releases. I don't pay attention to the economical data. I think it's all fake or all not relevant, I guess. So the numbers are real, but it doesn't affect the markets the way that people think it affects the markets. I think even Brian called this out in the chat. That 8:30 news release that happened like last week or 2 weeks ago, it was like, hey, this is like, there's no way that all millions of traders can respond this fast to this news release data. So this has got to be algorithmic, and it's exactly what it is, right? So this algorithm is, there's times where we'll have this thing called manual intervention, where basically the market makers, the algorithm will kick into the algorithm and basically just do stuff manually, right? So you got to think market makers are the people that basically make the markets. They set, if it's currencies or forex, they're setting the relationship between the central banks and the prices where stuff is traded to. So you can think of them as, like, when I say banks, there's different levels you're thinking about. Like banks, hedge funds, they're the traders that are actively taking part in this. Central banks are going to be your market makers. They're the people that are basically making the market. They're using the algorithms they're using the algorithm that we're talking about here to kind of control the market. And so when those news releases are happening, that how this was taught to me is that there's an opportunity for manual intervention where the algorithm, quote unquote, gets switched off and market makers are manually doing the markets, moving the markets to levels that they want to go to, basically clearing the playing field, right? Um, and so that is what's happened. And if you think about before, even before the algorithm was kind of a thing, um, even before the algorithm was really a thing, sorry, all these markets were basically made by people, right? And so price has always moved this way. It's just now there's, AI and algorithms that move things. But before, everything was, manually done. So, price has never moved up because people wanted to buy, or because a million people were buying and a million people were selling. It's always moved as a result of someone moving the price. And back in the day, it was the market makers clearing price, basically to trigger people in manually, and now it's an algorithm. But we're cool with that because algorithm has rules like any other program. Um, and so that means it can be traded. If there's rules to the game, that means the game can be played. And so that's why I don't trade during the news, because it's the only time where the rules are not obeyed. So again, not really trading, but I am noticing that uh, we did get really close. Like if I go to like a 15-minute time frame, yeah, you can see this is relative equal highs almost. And so right now we're not trading into a fair value gap. There's no fair value gap at all. But there's nothing really going on, nothing really to know. A lot of times what I'll do during this time, we're kind of within our 10-minute window. Um, or we're just inside of it. We got the 9:50 is the preferred time, sometimes 9:45, but at 9:45 to 9:50 time range, I'd like to see this high get taken out. Um, if I go to US 30 really quickly, same thing, relative equal highs. I think we're going to be trading over these highs today. US 30 was a little bit differently. This kind of gave us something a little bit better. So 8:30, we were trading underneath that low. We grabbed liquidity, traded back into that range. The move might be up for today. And a lot of times I'm looking at other markets as well to kind of give me a better understanding where price is going to go. I'm going to go down to US 30 really quickly. What time was this? This was below 8:30. Yeah, I'm not sure. This might just be a wash day, unfortunately, but we're taking out this high right now. You go back down to this 15-minute. Wrong version, sorry. Yeah. So we're taking out this high right now. About to grab buy side liquidity. So this might be a really great setup for um shorting opportunities. Um so now you see relative equal highs sitting under this target. So anytime, and I talked about this before a million times, market does the same stuff over and over again, right? So anytime you see relative equal highs, and I'm just gonna note this and draw this out. That is sitting right under a target. In this case, let me get rid of this fib. This is gonna be our buy side liquidity, right? That's the money right there, right? So buy side liquidity. So anytime you see that happen, you can pretty much bet that this is going to get hit, and this is just a matter of time. So we're seeing what's going on here. We look back here at current price action on the 1 minute. We can see that there's a very, very small imbalance here. Very, very small imbalance. Price is currently trading back into. Would not be surprised if it uses this as the opportunity to shoot through, but we'll see. Um, I don't like how we ran all the way to the high of the day and didn't hit it. And to me, it just seems like we're building liquidity to go back up. Yeah, that would be my guess. So really, I would look for an opportunity. I would be looking for an opportunity or a reason why, not an opportunity because we're not trading, but like I would look for a reason as to why price is, form these highs. Are we going to come down here and grab sell side and then go back up? Are we, because this is very distinctive, right? Very distinctive price signature. So I wouldn't be surprised if since we're not respecting that fair value gap, where could we be running to? Well, there's an imbalance there in the 1 minute. These lows right there, this low right here, and if we're trading here, we're probably going to take out the low of the day, right? And so this might very well be a day where we're trading back into the range. So we're really just kind of seeing what's going on. This could be, like I said, again, could be a wash day. Um, my guess is what's going to happen today is going to be price is going to come down to this buy side, take this, and then continue to go back up. I also don't want to be a buyer against this overall trend because we're not uh we're not actively trading today, one, and then two, the overall bigger trend is bearish. So I don't want to buy here. I mean, we're at the low of the week. This is like a situation where you're kind of falling in low in over a bottom over a knife. Today would not make a high probability setup, so it's not something I would actually want to trade. Trading on a day that's usually going to be counter trend. Let's go back to other pairs. A lot of times, like I like to look at other markets when where this is going on. Euro, see what's going on here. 830 we crashed. Not really gonna pay as much attention to Euro. I don't like how it's moving. Yeah, this is kind of either. I GBP, I think we're gonna come back up here. I just when I was looking at this in the daily time frame, I just felt like we've been consolidating under this fair value gap for a while. I would not be surprised if we came back in there, especially after getting all these wicks here. Um, a lot of weeks over the last month, really, pretty much September, pretty much this last week, we've been trading out of this fair value gap. Anyway, let's go back to NASDAQ. I want to look at US 30 really quickly, just kind of get a better understanding of where we're at with this. So same situation, these relative equal highs right there. So we tapped just a lot of liquidity building up over this high of the day. Would not be surprised if we swept this low and continue to go up. Um, those would be like the safest entries, I guess. Yeesh. Yeah, this kind of looks like a consolidated day. It might not be anything too big. So it's 10 o'clock right now. I'll leave this open until 11 o'clock. But really, we just looks like we've consolidated on both sides of the range. I don't really see too much of anything as of right now, other than these relative equal highs. Um, so I'm just making a note of those there. I don't know why that's there. Uh, yeah. So nothing really here. I want to see. I think price is going to come back up here. Just these relative equal highs here, and then just under the high of the day. I think we're going to come back up there. It's just too obvious. The question is, are we going to reject from here and continue to go up, or are we going to do something like this, where we break lows and then take out the high right there? So we could either do that, which would be the safest entry, quote unquote, if we were going to trade today, or we could just continue to go up. I think is what's going to happen. That's what I'd be waiting for. So it's a lot of consolidation. I could see a lot of different things happening, and so you want to wait till you get like some type of clue on what the daily bias is or the bias for the day today is. So just reacting to whatever price gives us, read and react, right? Yep. My guess again, if we're flowing lower, price is wow, it hit that fair value gap, that very small fair value gap. It just busted through it. That's interesting. I don't really see anything as of now, but we're giving ourselves that whole hour, right? So we will wait until 11 o'clock to see if there's a trade and go from there. All right, so we're back. Looks like we're getting some movement, or maybe we're not. I don't know. Why are we looking? E-mini futures just throwing me off. Uh, that's interesting. This is the high of the day. There, low of the day. Still have not gotten it yet. Took out. Wait a minute. Excuse me. There's a slight fluctuation. So NAS 100 is the Forex version of the NASDAQ or US 100. So some slight fluctuations. What's going on between this chart and the other chart? Again, there's nothing here. There's a couple things that I'm seeing, but nothing that I would feel comfortable trading. So we did get this fair value gap the price traded back into, and it's been rejecting off this level. To me, I think that we're coming down to this level to sell. So I'm just kind of waiting on that. So if I was taking a position today, like if I was taking a position and I think that price is going to come back down to this low, I would have sold here and took out this low, but looked for opportunities to sell. I'm not doing that because I want to get the best probability setup. And more often, I'm really just trying to see what the market does. We didn't trade to this. I mean, we got really close to the high of the day. So I'm just really curious what the play is for today. So I'll be on till about 11, and then after that, it's kind of is what it is. Like I'm not really kind of tripping about it for the rest of the day. So we're definitely consolidating. One thing that I've learned about these quote unquote wedge patterns, like technical analysis looked at like this is a wedge pattern. Um, just gonna drop some nuggets. And so for the longest time, I couldn't tell where the market was gonna go. And so one of the things that I looked for in the wedge patterns is, when I started applying this stuff that I'm teaching now to these ideas, uh, um, that when I started looking for wedges, sorry, when I started looking for imbalances and fair value gaps inside of the wedge, it usually kind of gives me an idea of where price is going to go. So we form this huge imbalance, and you'll start to see imbalances form to the sides that where the market price is going to go. But and then even if you get rid of this context, just look at stuff like this. You can start to see that we're starting to form an imbalance to the low there. Again, um, my 50% wick theory right here. Let's go encroachment. I just want to make sure that we're not respecting this. After a while, you can kind of eyeball stuff and see. kind of tell where 50% levels are at, just after you look at stuff for so long. Cool. So we're breaking past this level. So this would have been a short for the day. Um, an opportunity short, although we didn't take out the high of the day, coming really close to the high, breaking structure, short. Ideally, I think we're gonna like again, I think we're coming back here. Only because we didn't take it out, these relative equal highs sitting under buy side liquidity. It's a Friday, so it's going to be most likely a counter trend day. This is not only the low of the day, this is also the low of the week. We're trading very, very close to that. So I could see us retracing back into the range. We had a huge drop yesterday. So not only did this move take out this move retracement up here, built these relative equal highs. It also took out buy side liquidity over yesterday's consolidation. So that was really interesting. But yeah, I want to see ideally in this range, I want to see this low get taken out and then maybe we trade back into consolidation. Boom. All right, so we just took out low of the day. Now, if I'm right about my Friday predictions, a lot of times, like I said, we'll trade back into the range. So we finally took out the sell side liquidity that was sitting underneath this low. Where's my money bags at? There they are right there. Boom. So this is like kind of like when we talk about the Asian session and we talk about kind of like consolidation, right? This is our consolidated channel for the Asian session or in Forex. It's the same thing in this for our NASDAQ pairs. So we just took out sell side liquidity here. So obviously the next piece of this whole thing is a market structure shift. So we want to see a market structure shift. And stuff break structure, right? Yeah, so all right, so speeding up stuff right here, right? So there's a technically we're trading back into this imbalance right here. So I'd be really interested to see if we continue to trade lower. I want a really convincing market structure shift. Technically, this is theoretically a market structure shift. We're trading back into this fair value gap right there. So I don't like that. We go up a time frame, no real market structure shift. I think we might trade lower. This is definitely chart time, right? This is what we want to see. This is definitely chart time. So now think about it. We got a bag full of buy orders here. I'm sorry, a bag full of sell orders here. We got sell side liquidity. I'm just gonna bring this over so you can see that. We got a bag full of sell orders here. The overall trend is bearish. So keeping that context in mind. Ideally, what we would have wanted to see, if we wanted to continue going short on a position and find an opportunity to short, although these are short eye opportunities, and we kind of made a note that we could have traded those, and that's like 60 pips points right there. That's a very safe trade we could have taken. But the real safe trade is when we're trading over the high of the day. And the same way in Forex, when we ride that accumulation up and we want to ride that manipulation and sell down to the distribution. The same thing in Forex. We would wanted to see if we wanted to go short and be sure about it, we would have wanted to see a trade over the high of the day. Since I don't see that, I'm not taking it, right? Um, what I want to see now is I want to see if we're going to kind of follow that Friday idea of us trading back into the range. So what I'd like to see is a break of structure, convincing break of structure, going the other way. So maybe something like this high getting taken out. So I'm challenging myself to take better setups in 2023 going into 2024. So we'll see what happens here. But I'll outline this for being a short. Turn my camera back on. So the biggest part about trading is obviously the waiting game, right? So I would want to see a convincing market structure shift above this high. We're also really trading close to this high of the day. I mean, it would be kind of cool if we dove down a little bit more to give us a little bit more breathing room on a trade. If we were to get into a trade on this going the opposite direction, we would want to get out somewhere around this 50% level. So see that imbalance, it's right there. Small one right there. We'd also see this high right there that's sitting over the 50%. And then obviously this, would be an inverted fair value gap on the higher time frame. So we could ride stuff to about that 50% level. That's where we're going. Still haven't gotten the market structure shift yet. So it's kind of what I would be waiting for to go higher. But I would honestly like just to see go a little bit lower before we made that shift because it gives us more room to trade back into the range with. You see how uh, we are rejecting off of the high of the day or the low of the day. Just making a note, the algorithm makes notes of these points as well. See how there wasn't any resistance here, or here really in that run down. But we're getting flack off the high of the day. It's because the algorithm references those points, the high, low, middle of the day. Because it's no different than looking at a candle or a wick, right? On the daily, weekly time frame and noting those same levels. So that's where we at. Some days, there's some days where like the trade will come so fast, or the setup idea will come so fast that um you're in and out in like 30 minutes. Like some days, we would have already been done for today. Some days you're sitting up here waiting till 11 o'clock to see what happens. So we're starting to get that low tick, traded deeper into. So we're trading off of this low of the day. If I go to the 5 minute time frame, this is where we're at. Uh, what I'd like to see here is again, break structure, continue to go down. We grab sell side. because we look at this big 15-minute fair value gap that's formed right here. We could probably see price trade back into that. That could be our daily setup. So as I'm looking here, that 15-minute fair value gap that kind of encompasses everything. So that's not a big, it's not a big setup. It's like 50 points, 60 points. That's okay. Not a big setup for NASDAQ. If this is Forex, that would be a big trade. So what I would like to see is price kind of break structure, give us a fair value gap, trade back into this range, and that would be what I would be looking for the day. But if I go to NAS or if I go to US 30, you could probably see something like that, especially with these relative equal highs sitting here on US 30. This just looks really clean. Um, really clean. That price is gonna, trade into that. Wonder if there's any news today. No news. So looks good. I don't think, I mean, basically, if we're waiting on this breaker structure. Now, keep in mind the overall trend is bearish, right? And so the only setup that I could have seen us take is a bearish setup because we didn't take out the high of the day. So, or is a bullish setup because we didn't take out the high of the day. So there's nothing really going on for me to really get excited about. We know overall this is kind of like our bigger draw liquidity right here that we're kind of heading towards too. This is what we called out. I think this is what we're going to be heading to pretty much this entire week. Also, again, with trendline liquidity, I'm doing a higher time frame analysis now, but want to see us respect. Wow, what is going on? These. Okay. So we're definitely heading on the weekly time frame. The draw on liquidity is going to be this relative sell side. That's the long term what we're looking at. I'm going to mark out consequent encroachment here. See how price reacts when it gets to that level. So I'm just going to make a note of that. Sorry, there's not really a sell setup, buy setup that's happening right now. So I'd like to see, I'd like to find for us to trade back in the range, but again, it's against the overall order flow. So we'll just see what happens. But you want to use these sessions to kind of get used to price action moving, stuff like that. And so the fact that we just let these highs open though is really interesting. But we're starting to make an elevated run now. So that's good. It's good for our overall bias. Not necessarily good for today's like sell setup. Trading back into this fair value gap, we kind of expect the price to trade a little bit lower. I'd like to see a price break structure and kind of come back into this range some way, somehow, because it would give us a really good retracement against the range. But it's also not something that I, again, would take because it's against the counter trend trade. I would be looking for opportunities to trade back into this range. So you also want to make the note too that, as you're journaling here, what are we seeing? We saw, sell setups here. We saw sell setup in there. Although we didn't take out the high of the day, we started to trade lower and break structure and take out liquidity. So I'm making a note of our 50% level, just right there. And so you see how our 50% level is now lining up with this fair value gap that's in the 15-minute time frame. So you're just making notes of all of this stuff as price happens. You're not necessarily looking for a trade. like during these tapering days, you're not really looking for a trade setup. You're much just kind of knowing, seeing how price flows and moves, right? So ultimately, we saw these relative equal highs right there. Kind of made a note that like maybe there might be an opportunity to trade back into this range. As we go to the 1 minute time frame. In this range somewhere, we would like to see a market structure shift. If you look up, we're not really getting any type of gaps or imbalances. It's a small one right there to there. So see how that happens, if that happens. Um, so ideally, I'd like to see some type of break of structure on this 1, 2, 3, 4 minute time frame. 2 minutes, 3 minutes. I don't really see anything yet. This we're also getting really close to that end of that hour. No structure broken. Even though we did go on a retrace, no structure broken. If we break this down to 1 minute time frame, this is our order block right here. So, if we're respecting that fair value gap right there. Um, that's kind of letting us know that the downtrend's going to continue. Let's go to US 30, see what's going on. So US 30 actually broke structure. So this sometimes, you have to look at the opposite correlating pair to get a better understanding of what's going on. So US 30 is actually doing stuff that we would like to see. So we saw fair value gap right there. Fair value gap right there. It's our high of the day. And sometimes the trade doesn't happen in the pair that you want to see happen. Sometimes it happens in the other pair. So the setup actually is playing out exactly in NASDAQ, or sorry, in US 30. And we'll see, sometimes that means there might be an entry coming on the other pairs. So we see price trading back into that fair value gap. Also have a breaker right there. The price is trading back into. So I would like to see price continue just to take off, and then the other pairs, so US 30 and S&P 500 to take that as well. I obviously we teach going to the 50% level. That's the goal. These relative equal highs look really clean though, so I would exit there and then see if I'm right by going up there. Get back to Nasdaq. I would love to see just a break of this high and then price just to continue to go up and go towards our key levels. Let me go back to, I have way too many NASDAQs open. The charts. There we go. Same thing. I'd love to just see price can take out this level and give us a break of structure. I don't know if we're gonna get that. The US 30 is definitely like responding the way that it should. So same thing. Again, sometimes the play is not going to always happen on the pair that you think it's going to happen on. That's why I always reference some of these because if we see S&P doing this, we see Dow Jones doing this, most likely Nasdaq is going to do the same thing. Where is my US 500? Excuse me. US 500. That's it. Oh, yeah, there you go. So same thing, we're really not getting any type of breaks on this. So US 30 is the only one that's really doing. It's really kind of obeying structure. Yeah. We're trading into that secondary fair value gap. We'd like to see this hold and continue to go further. Now, keeping the note in mind that this is a counter trend trade, our overall trend is bearish. So this is not a trade that I actually would take because we're heavy to the downside on US 30, but just to show you that the logic works both ways. So we're trading into this order block right here. It's kind of extending this out in time. This is our order block right there. Price reacting off of it. Thinking this is fix this right. See what happens here. Same thing here. We took liquidity over that low. I wouldn't. I don't think there would be a setup here. But ideally, we would, we're our overall bias is playing out where we're bearish in the downside. Just the intraday opportunity to maybe take a counter trend trade is not there, which is cool because we don't want to take trades that are against the overall trend to begin with. But, you know, so yes, that's a little bit of what I'll be looking at, looking for. Um, let's see how this reacts to this. There's an imbalance in here, so we'll see if this just wants to fall over and keep going short or not, but 2 minute imbalance, 3 minute. I think US 30 is the one that I'm gonna pay attention, look the most at because it is kind of reacting the most that I would want to see from a counter trend setup. Nasdaq is not, and yeah, this isn't either. So I think ultimately, we're gonna continue on with the bearish bias. Yeah, we're definitely continuing on with that bearish bias. Which is good because that's what we wanted to see from the beginning of the day. Uh, what we wanted to see is price trade into this. From our weekly time frame, we do expect price to continue to go down overall. Just wanted to see there's an opportunity for a counter trend trade here. We don't I'm not seeing one. Don't see one that we're not taking anything. Yeah. Something there. This is going to continue to go out and probably take sell side that low and keep going. I don't see anything here. And I think since we're getting close to the end of the hour, this is what I want to see. There might be something in the afternoon session that kind of retraces back into the range, especially since we're making weekly lows at the end of the week. Um, quickly, see what's going on. Yeah, this is it for the day. I'm not looking at anything. Ideally, if we, whoa, wait a minute. Yeah, what's going on here? I'll give it till 11 o'clock. I don't think there's anything here though that I would want to partake in. Nasdaq, it seems like it's kind of like being or sorry, US 30 seems like it's being the best one out of the three though, in terms of giving us a setup. Mm. So if we were to enter in a position, we would have been stopped out right there. we also retested. We gave us relative equal lows over the low of the day. Like that's kind of alarming. I think this day is just kind of like a wash day where it's just there's nothing really there as far as like take it's trying to take out both sides of the liquidity run. But I'm noting there's a couple things that I'm noting. So change the screen, change this green as well. So we're taking back into the range. Yeah, there's nothing really. As far as entries go, there's nothing really there. 2 minute. Really, not really anything there. Not anything that we wouldn't have been stopped out on. So we didn't really miss anything. Oh. Not anything that we wouldn't have. Yeah, not anything that we wouldn't have been stopped out on. Go to the 1 minute time frame. Let's see what's popping down here. Yeah, I don't really see too much. US 30 is interesting because it's actually giving us what we would be looking for. Just no entry. I mean, there's an imbalance right here. There's just consecutive imbalances, BISI's forming right here. So we took out this high. I think this will be a good setup when price trades back into this range. We would have got stopped out right there, but this will be the secondary try. Usually I give myself like 2 trades in a particular session. And so usually if I get to 2 losses in a day, then it's kind of like my signal to let me know that I'm done for the day. Um so like to see price trade back into that range. It's giving us relative equal highs right there. So I'd like to see price trade into that. And then maybe even go as high as that 50% mark. US 30 is a little different. It moves a lot. So from here 270 to here, this would be like a 40 point, 40, 50 point position. Oops. So I would enter like right off of here. This would be my secondary entry position. Target would be here. My stop would go right there. So the risk to reward is like 1 to 1.5, which is good. It's not great. It's not great. Um, I'd like to see a 1 to 2. So I don't even know if I would have. Yeah, I mean, I probably would have taken it, but see this order block trading right there. Price is gonna react off of that. Let's make a note. Obviously, your stop loss goes below the low. In this case, since there's a couple other things here, like a secondary fair value gap right there, I would probably put my stop loss under the low of the day. So that makes the reverse reward even worse. Now, if you're thinking that price could go all the way to the high of the day, then it makes it like it dramatically increases the risk to reward ratio. But yeah, it makes it like almost a 1 to 3. But I don't really, not really confident in this setup. One, because it's counter trend. This is also why we don't take counter trend trades. Um, because overall order flow is down. Right. So whatever run happens here, even if it goes and takes out the high, right? Even if it trades all the way back up to this high, it's not going to be a sustained run that's going to last for the next day or two. This is simply just a pullback. So let's see what's going on with NASDAQ, see if the same thing is happening. If NASDAQ takes out this high, then that would probably give us a signal that the same thing's about to happen. We're also getting close to our time window. We're almost 7 minutes out. So that might also stop us from taking the trade too, or taking a trade on that too. So let's kind of where we're at. I just don't really see. We know that the imbalances with the order block are going to be the strongest form of quote unquote support or resistance. I guess technically support in this case. I just don't like using those terms anymore because they kind of are like basic ideas. This just kind of looks like consolidation. Like this is not something that's like high probability. Again, it's not taking advantage of the high of the day, um, which ideally the best trade setup, the most ideal trade setup would have been if we would have took out liquidity over this high, got really, really close to it, and then formed that fair value gap right there. That would have been an amazing short, and that would have been in our time window and everything. So that would have been probably the play of the day that I would have wanted to see. And I'm wondering, it didn't happen on US 30. I don't think it happened on NASDAQ. Yeah, we got really close to it. Yeah, we didn't take it out. If it happened on S&P, didn't happen on S&P either. So, yeah, I mean, that's what I would have wanted to see is like a trade over that high. But you're gonna have days like this, and obviously today is not really a day that we want to trade anyway. But if this was, you're gonna have days like this where price just misses what you wanted to do. So at 9:30, I would have loved to see it take out that high, give us that structure, and then look at that and trade. This could have been an opportunity. Probably once we started to break lower, you could have taken that opportunity to sell, especially as we're getting that 10 o'clock hour. But again, highest probability setups, right? We're not here to like take gambles. So this is just all consolidation. I wouldn't be looking to trade this at all. Need to go back to the 5 minute. Yeah, there's nothing here that I would like feel comfortable taking. And then we're also trading back into this breaker situation. So like if you're looking for a continuation to take the shorts, would have been this. This fair value gap right there. But we also didn't really take out. I mean, we took out intraday liquidity, like internal range liquidity over this high, but our setup really calls for us taking out the setup, the high of the day. So there are ways that you could have taken this as well. Like if I was just looking at the internal range liquidity that built up here, would make a little sense, but I want the high of the day. So some days you're gonna come the terminal and they're just gonna be like this. Don't try and force the setup in any direction. Um, and again, if we're just being 100% consistent with um, our ideas and setups, this would have been the play that we would have looked to see to continue on with the overall trend. And then again, I'm making the note that I made a few times throughout the day that Friday setup is a day we don't typically trade because we tend to get counter trend setups. Um, so yeah, this just looks like a consolidated range. We're getting close to the 11 o'clock hour. So as soon as 11 o'clock hits, I'm logging off for the weekend and maybe something will happen in the PM session. I don't really care. I don't trade PM session. Um, so yeah, let's see what's going on with other pairs really quickly. Yeah, this is just mess. Dollar index, I eventually wanted to see it take out that consequent encroachment level that we talked about, but yeah, there's just nothing there. I mean, it's eventually I think it's gonna take out this level, but I'm not pressed to trade any Forex pairs until that happens. And yeah, with this NASDAQ, we were taking out these lows, these relative equal lows that are there. Oh, wait a minute. Oh yeah, this is the daily time frame. I got confused. Yeah, so we're heading to these relative equal lows. I wouldn't be surprised if we hit those today. That's kind of like the bigger overall target. Just trying to get you guys to see if there was a counter trend set up. That was gonna happen, but I guess not. So we'll see if price hits those. That was kind of like our big weekly time frame. And in the ideal world, we don't hit these, and this will be our target to aim for next week. But this is what we called out at the beginning of the week that we wanted to see on NASDAQ get hit these relative equal lows. And we just had a really crazy rejection over the past couple of days. So kind of mad that I didn't hold my trade from yesterday during FOMC, or else I'd have already been, you know, in a really good position. So yeah, we'll be back on the charts to Monday, and looks like, well, let me look see what's going on really quickly before we log off. We're getting close to 11 o'clock. It's about 11. And so this is like when you ever see price action just continually consistently make lower lows like this is just, man, this is algorithmic, man. So this is not getting broken anytime soon. That's 100. So we did break structure here. Check out this fair value gap. We're definitely past our window, so this would not be a tradable thing. But a lot of times the logic is still there. I mean, every time the logic is there. Let me go back down to NASDAQ 100 and see other NASDAQs. Is this it? We're down to that. We did break structure. We traded back down to that range. I don't really see anything worth talking about. There's no fair value gaps, so that doesn't matter. Not on the 2 minute, not on the 3 minute. In fact, we're trading back into an imbalance there. Not on the 5 minute or the 4 minute. Yeah, so there's nothing really here. I'm gonna call it a day, and if something happens after that fact, then that's just is what it is. But I am making the note here that these buy side liquidity pools are sitting right there. In the event that we do get a trade, maybe in the PM session above these highs. Um, and we didn't really take out the buy side yet. So who knows? I think, we'll see what happens in the PM session. I'm not going to trade it. See what happened to US 30. US 30 actually is, sorry, I told myself I'm going to get off. think US 30 has kind of been the leader for the day, just kind of giving us ideas of what price is going to do. Traded back into that secondary imbalance right there, and it's kind of giving us, yeah, this is it right here. So I'd like to see US 30 take out these relative equal highs right here. And then trade. I would look to exit the 50% mark and then um, take out, there's a fair value gap that's right here. So I would want to see price take that out. And I would look to exit right there. And that would be like my quote unquote trade setup. But there's a lot of stuff there. It's just this consolidation. Again, noting that we do have relative equal lows here. We are on an overall downtrend. I do think we're going to come back down here and take this out. But this is just one of those days where we're in a range that was it was a big range after a long trading day. I mean, look how far price fell on the NASDAQ and I'm sorry, in the US 30 and then all of the pairs. It was hundreds of points, right? And so as we get closer to this, I'm just going to outline what's happening right here. So we busted out of this fair value gap right here from this high to this high, right? And so we're retesting this gap again. Ideally, I'd like to see this, take off, take out these relative equal highs right there. That would be kind of like our first target. The second target would be this imbalance right there. So we take out those highs. Like to see price continue to keep going forward. And we kind of juggle time frames to see where we're at. Again, I'm not trading today. No positions actually on. Same thing with NASDAQ, right? We broke structure. We took out this swing low point right there. If I go to the 2-minute time frame, there for us, and then obviously 5 minutes not going to be either. Go on to the E-mini S&P, nothing there. So just kind of been trading back and forth. So let's see what's going on with US 30. Yeah, so we took out those relative equal highs, just wicked right above them. We're still sitting inside of this fair value gap. I would like price to continue on and just go up to that 50% fair value gap. But really just a whole lot of consolidation. This is not a day that's like a high probability day. And so there's a small imbalance. See a lot of overlapping fair value gaps, kind of letting you know that you're on the right track when you start seeing imbalances in multiple time frames going against, what the current trend is. And so from this low, which is our last imbalance right there, let me get rid of some of these. See this a little better. From this low, it's 32,230, and to this high is 32,000. Looks like 310. So this is like a 90-point trade. Again, on a pair that I usually don't trade, but I would like to see price trade back into this fair value gap. We just took out liquidity over these relative equal highs. I just want to see this surge and really take that out. Overall, still very much bearish, right? Like we know this is a short-term setup. We could get here. We could get as high as the high of the day, but overall, this thing's gonna roll over and go short, right? And so let me look back at what's going on. It's not a high probability day at all. A lot of consolidation, a lot of choppiness. We took out liquidity, but not necessarily where we wanted it at. There's a small imbalance that we're trading to on the 3 minute time frame. So that's also something I would be looking for to see if price just peaks back down into that and continues to go up. There's not, again, this is not, we're late in the hour, right? We want to be done by 11. We um have not did not get a play off the high of the day. We're trading against the overall trend. This is a low probability trade. This is why I would never take this for real. Um, it's just not. It's not lending itself to a market condition that we think is gonna um, be really good. Yeah. So we just traded into that little 3 minute fair value gap. Want to see if price reacts. If not, this would be, me calling it a day, to be completely honest, because, there's a lot of stuff that's not really lending itself to a good market condition as well. So look here. So we've been in a consolidated range where we've gotten some movement. We did take out liquidity over these highs. So it's not great. It's very choppy. If you look at NASDAQ has not really lent itself well to a great market condition either. So we broke structure, but now we're trading back underneath structure. That's not great. Um, yeah, there's no real gaps. I go to 2 minute. So nothing. How's it reacting like that? A minute? Yeah, nothing. I don't know why it's reacting like that. Um, so yeah, no reason why it's doing that to me. Yeah, so this is just like a consolidated range. I don't like this, and I also don't like the fact that here we have relative equal lows sitting right there as well. So I this would be a situation where I would just kind of call it and note that the move for the session was this big drop that happened right in our window, our 10 o'clock window. But seeing as we didn't grab liquidity, we didn't really grab any type of fair value gap on this chart or pair. I would want to see price come back down and take these lows out. This is just consolidated mess. But you saw the logic on how we traded into these gaps, took out relative equal high, didn't get as quite as high as we wanted to see. But um, overall, we know what this is. We know this is a low probability day for trading. We know that this is something that we wouldn't want to see us actually take positions on. And that's why we're talking through it, right? We know overall on the daily and weekly that we are heading for lower prices on every index, right? Right. So here and here is, these the sell side sitting on these lows are long-term target on NASDAQ. We look at Dow. I'm sorry. Ugh, that's messy. We look at NASDAQ, we can see that same thing. We're heading for these relative equal low sell. So that's kind of been our target that was outlined at the beginning of the week on Sunday. I just thought we might take a little bit longer to trade into it than what we've gotten. Um, so it's actually moving pretty quickly once we left this gap. This was yesterday's price action today. So yeah, that's what we're looking for. Um, Again, I don't really see anything here that would have made me like actually jump in this stuff today. Um, yeah, there's nothing here that I would participate in. S&P is dropping like crazy too. Just touch this imbalance again. Again, obviously the target is sell side. See, and I've been making this prediction for weeks because you can see all these different arrows coming down to take out this the sell side that's been sitting here. This has been a target that I've been looking for a while to get hit. Um, so yeah, so this is hopefully this helps a little bit. I'm actually gonna go ahead and log off. So I don't see any reason as to why I'll take a counter trend trade here. And I also don't see us getting our targets hit as well. So this is just kind of a day that we would have just watched happen, or if we would have looked to try and participate in the mess that happened at 10 o'clock or after 10 o'clock, catching a trend um, to the downside. I don't trade on Fridays for the reasons that I've outlined. Low probability day. Most of the time, it is a counter trend trade day. Um, so if I'm taking a trade, it's going to be Tuesday, Wednesday, Thursday, just the highest probabilities. So why not go against take the highest probability setups? If I can take two, three trades in a week or two, three setups in a week, that's the only thing that I'm really looking for. Um, so hopefully this helps, guys. I'm gonna go ahead and log off. I wouldn't be surprised just off of the way that we're consolidating here, that especially as we're getting close to the lunch hour, that we come back down and run these relative equal lows right there. We took the liquidity out over these. Let's take the liquidity out over those. And yeah, so this is just a thought process of like what you would come to do during a tape reading session. You're not coming here to trade, but you're coming here to examine the relationship with price, right? Um, and how price moves and get used to the movement on these index pairs or whatever pair you're trading. And it's okay to not take a position. If you're outside your windows, you're outside your days, and you trade, now there's going to be certain days and times where I will look to trade on a Monday and Friday. I'm more apt to want to trade on oops, dang it. Sorry, I'm stop recording. I'm more apt to want to trade on a Friday if it's post FOMC. I'm sorry, trade on a Monday if it's, pre FOMC or pre NFP. I might take a Monday position then, but otherwise, I'm not really looking to trade those days. So hopefully this helps. Hopefully it kind of gives you guys an idea of what I'm looking for in a trade setup and what a day looks like when you're not taking a position, you're just outlining price, or what a failed setup would be, right? So if we go back really quickly to that NASDAQ setup, like once again, this would have been an A1 setup. This would have been a setup that it's a Friday, but you might have taken it if we have just grabbed liquidity over these highs. We ran really close to these highs and didn't take it out. And so I just didn't feel comfortable taking that trade. So, but taking out the liquidity right there, forming a fair value gap right there, oh man, that would have been an A1 setup. And I would have been more likely to want to continue down with the downtrend and not look for a counter trend trade. So the only reason that I thought a counter trend trade might have happened today is because we didn't take out the liquidity and we left relative equal highs right there. We know the market always, not always, but a lot of time wants to run back up and retest those levels and grab the liquidity that it left and engineered there. So since that didn't happen, we're out. So uh but that would have been an A1 setup right there to continue on with the downtrend. And we did run a lot of points. We ran like 100, we're 200 points to the downside. So that would have been an amazing trade. And it would have been in line with our overall weekly bias and weekly trend. So that's basically, I guess you could consider this almost a failed trading day, but not really because we weren't looking to trade. But a failed setup, that's what a setup would look like. Now, Again, the market did offer a few opportunities to hop in if you wanted to, but I just feel most comfortable taking trades where it takes the high of the day's liquidity out. So if I don't see that, I'm usually not out. Usually not trading, especially when you think about positions and right. And like, we're not here to gamble to make money. We want to know exactly what's going on, and we want to feel comfortable at, most of the time when we're in the position. So hopefully this helps, and hopefully you guys kind of got an idea of tapering sessions. I'll do more of these. Some days will be winners, some days will be losers, some days we'll take positions, some days we won't. And yeah, hopefully this kind of helps you see the strategy a little bit more. Peace.